newsmakers, and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the US and China will temporarily lower tariffs on each other's products in a move to cool trade tensions and give the world's two largest economies 3 more months to resolve their differences. Now, the combined 145% US levies on most Chinese imports will be reduced to 30%, while the 125% Chinese duties on US goods will drop to 10%. It follows talks between the two countries in Switzerland over the weekend. Now, the U.S. Treasury Secretary Scott Bessent said the tariffs applied on China during the first Trump administration remain in place.
Neither side wants a decoupling. And what had occurred with these very high tariffs, as Ambassador Greer said, was the equivalent of an embargo. And neither side wants that. We do want trade. We want more balanced trade.
Well, let's bring in Brendan Murray, who's Bloomberg's global trade czar. As our global trade czar, you've been extremely busy, especially in the last hour. I mean, there seems to be concessions, but this is like a moratorium. It's a 90-day window in which to negotiate. So it feels like a big deal, but will it last? Yeah, it's definitely a surprise, especially in the amount that the U.S. gave up. The U.S. had all this leverage on China, as you said, 145% tariffs. They basically take the 145 down to what every other country has, a 10% baseline and the 20% fentanyl tariffs. And so if you're China, you're looking at this and going, we didn't give up much to get a lot from the U.S. So we're already hearing our contacts say that this represents basically a retreat from Washington's perspective, particularly when we heard Donald Trump say just a few days ago that 80% would be a reasonable rate. Here, the U.S. is coming back with 30%, less than half of that. So obviously, markets are liking that, and they're certainly liking it in China. So what does it mean for U.S.-China relations? And again, do we know why the U.S. gave so much? Do they need a deal at all costs? Do they need China for something else? Well, I think we're still sorting through a lot of those details, and not only what was in this deal, but what wasn't in it. What's happening with critical minerals that China has restricted the exports of? Are there non-tariff barriers that China tentatively agreed to lower that will be worked out over the next 90 days. 90 days is a very quick span of time to negotiate trade disagreements, and so it's going to be interesting to see how this plays out and how much the U.S. can actually accomplish, particularly now that they've given away all this leverage that they have. Yeah, so interesting. Brendan, thank you so much. Brendan Murray there. I know we'll go to Brendan as often as we do now to try and understand what the next step in this trade is. Now, we're also joined by the BlackRock Global Chief Investment Strategist, Weili Wei. Such a great day to speak to you. As always, to be fair, it's always a Weili kind of day. But to understand trade, I mean, you understand dynamics like few people do in the markets. Is this a long-lasting kind of agreement, a good basis, or could it turn around very quickly?
Today we definitely had good news, better than expected versus expectations heading into the weekend. There is now a mechanism for engagement, and also typically after meeting statements tend to differ, US-China, but this time they are both consistently positive. But of course, there is still a huge amount of uncertainty. 30% is still quite restrictive by historical standards, but today taught us two things. I would say confirm two things for us. Number one, there are lots of uncertainties during negotiations, but there are also immutable laws that can govern the destination of these negotiations. The two immutable laws that we have identified helping us try to gauge the landing zone is, number one, the debt dynamics in the US. 25% of the US debt is owned by foreign investors, and there is a debt sustainability concern that one has to consider as one engages in negotiations on trade. And the second immutable law is around supply chain. Supply chains built over decades cannot be ripped out just overnight. And the level of tariffs between US China are at a level, were at a level that is essentially trade embargo. And then at this point, we're not talking about higher prices anymore. We're talking about critical access being cut off, no longer having essential goods on the shelf. And these are important considerations that can help land the negotiation. And the last thing I would say that today has confirmed for us is that elevated uncertainty does not mean certainty of a bad outcome. It just means a wide range of outcomes. So this is why we have been positive through this period of uncertainty, because we believe immutable laws can govern the landing spot.
I mean, I guess, Wei, the markets are greeting this as progress. If you look back to 2018, there was a bit of a wobble. There was progress between the U.S. and China, and then there was, the U.S. being backed away from that deal. So what's the best way to position yourself in markets right now?
I think it's important to focus on fundamentals during this period of policy uncertainty. If we look at earnings so far, the earnings season day is just wrapping up. We're still having U.S. corporates surprising to the upside versus expectation at the beginning of the quarter by about positive delta of 2%. We're still seeing companies committing their AI capex. You look at hyperscalers' capex commitment, that has not decreased, it has actually increased. But of course, companies are citing greater uncertainty. Companies are pulling their guidance. Companies are giving out for the first time scenario-based guidance. So the longer this uncertainty lasts, the greater the risk of this sticking and dragging down overall outlook. But for now, fundamentals are still okay. US data, hard data, is stronger than sentiment, soft data. So fundamentals still support a somewhat positive view on equities, which is what we have. And the last thing I would say, you talked about 2018 as a parallel. The difference between Trump second term and the first term is that in the first term we had the tax cuts before the tariffs announcement, but this time around we had the tariffs, the bet for market bits of the policies being announced first, and then the good bits for markets, good bits of the policy that can be good for markets could be around the corner. We're seeing reconciliation being debated in Senate and House. We're seeing talks of deregulation. So I think these parts of Trump policies could support sentiment later down the line, which again is why we have been positive despite a huge amount of policy uncertainty plaguing sentiment.
On trade, are you expecting actually the U.S. to, I don't know whether it's a turnaround again, it seems that the U.S. gave in quite a lot to China. So do you expect a new U.S. that tries to, temper some of what they want in these trade wars because they just realize that they need the economy and they need investors on their side? Or is that wishful thinking?
I think trade policies are expected to deliver two things. First is to try to bring down trade deficit, as we saw with the announcement of the April 2nd, and the goal there was clearly to try to close trade deficit across the board. And the second goal of trade policy and tariffs is to collect tax revenue, because the U.S. needs that additional tax revenue to fund the tax cut, to fund additional spending. So it's designed to achieve both, which is why a landing zone somewhere between 15, 10, 20% is perhaps realistic versus just going all the way back to before trade negotiations and tariffs talks started. So markets are reacting as though we're going back to all the way to the beginning of this trade route, trade-driven volatility. I think somewhere in between is perhaps a reasonable landing spot because of the multiple objectives trade policies are expected to solve for, one being revenue collection.
The other thing is that, last week, at the end of last week, we had a couple of Fed presidents really putting more of the focus on inflation rather than labor dynamics. Are you expecting the Fed maybe to wait to cut rates a little bit more than what the market's pricing in?
I think that's fair. We're expecting 1-2 cuts for this year. Markets are expecting Fed cuts to kind of resume or start being talked about in the second half of this year. That feels right. And depending on the inflationary dynamics, we could see that being pushed out even further. What we have seen so far is that markets are expecting the Fed to respond more to potentially deteriorating labor market dynamics or deteriorating growth dynamics, but both Fed speakers as well as we believe that inflation is still a number one consideration, especially in the context of structural forces pushing up inflation over the structural horizon, one being aging population, one being geopolitical fragmentation. So because of all these structural forces and trade considerations further adding to that stagflationary concern, we believe inflationary dynamics is something that the Fed will have to prioritize. We're not going back to an environment where the Fed can readily come to the rescue of a weakening economy. We're talking about high for longer for US rates from here on.
Wei, thank you so much, as always, for joining us. Wei Li there, BlackRock's Global Chief Investment Strategist. Now, coming up, we'll be joined by the EBRD President, Odile Renaud-Basso, as the bank also expands operations into sub-Saharan Africa. That's next, and this is Bloomberg. Welcome back, everyone. The conversations that matter and the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, stocks in India and Pakistan are rallying after U.S. President Donald Trump announced a ceasefire on Saturday following 4 days of clashes. But Bloomberg has been told that the announcement took Indian officials by surprise. Now, let's bring in Ros Matheson, our EMEA news director, for a roundup of the main stories today. Ros, I mean, tell us why some people in India are angry, including officials, and rejecting U.S. offers to mediate between the two countries.
Well, obviously, the issue of Kashmir is a very long-running one, and India is always seen as a bilateral issue that it wants to negotiate directly with Pakistan on. And it says those conversations were happening, and then, in a way, Donald Trump sort of stole Narendra Modi's thunder by just announcing on social media there was a ceasefire. And in a way, in doing so, according to India, put Pakistan and India on the same footing when it comes to the Kashmir issue. And that's something that India is very sensitive about. And so the optics of it didn't land very well in Delhi as a result. The idea that, the attack that preempted this bout of military tension and the military actions that followed was somehow equal for a start, and that Pakistan and India are equal players on the global stage in discussing it. And so all the way that came out obviously hit a nerve in Delhi, and we can see that in the reaction that we were hearing about. I mean, markets are cheering the fact there's a ceasefire. This ceasefire does seem to be holding, but in Pakistan there were almost scenes of jubilation off the back of this, again because it looked like Pakistan had gotten something out of it. And so optically for India it's all a bit awkward.
Turning to Ukraine's ceasefire negotiations, now the president of Ukraine is challenging Vladimir Putin to engage in talks this week. Will he?
Well, that's the interesting thing. I mean, Zelensky says he's going to go to Turkey and sit there and wait and see who turns up. And we're expecting someone will come from Russia potentially. Is it going to be Vladimir Putin? That would be really surprising, because Putin first wants to sit down, no doubt, with Donald Trump and then maybe talk with Zelensky face to face. So the question is, who would show from the Russia end? And is that someone who's senior enough to keep all these balls in the air with Donald Trump, who's showing some frustration here? He's like, guys, I want you guys to meet. I want a deal done. What's taking so long? And so Putin has to manage, the US side of this as well. He's obviously trying to stretch things out to avoid the resumption of sanctions. Europe is saying, if you don't get ceasefire straight away, we'll put sanctions on you. That can probably go to one side until we see what happens on Thursday. And do we get those direct talks between Ukraine and Russia? Who's involved aside from Zelensky, and what is the pathway from there?
Ross, more broadly, I don't know whether there's a shift actually. In the U.S. administration was pretty generous with China today on the trade deal. There's also, I mean, he's getting under scrutiny because of a plane, because, that's $500 million worth of plane that Qatar gave him. Like, what's being said inside?
Well, it's interesting to see there's a lot going on here, right? Donald Trump's about to head to the Middle East. There are reports, that he maybe will get gifted a jumbo jet, a luxury jet from the Qataris he could use as Air Force One for a certain period. That would be the most luxurious donation ever to a US administration. So there's a lot of complexities around his time in the Middle East. Meantime, we do have some progress on US and China. It's a pretty good deal for China too, in terms of getting these tariffs down for 90 days. If you look under the hood, there's a lot that's still undone. This is reciprocal tariffs, not sectoral tariffs. Where does it leave rare earths? No discussion around currency. I mean, this is a complex, big relationship. But the fact that they got something they could announce today together is interesting. And certainly that set things on a pathway, perhaps, to some of those more complex issues going forward. The question is, with all these things in the air, you've got Donald Trump wanting to sort out China, Ukraine, the Middle East, big trip again this week, trying to get investment coming in from the Saudis and others. And he's got trade tensions still with Europe and trade deals to do with Asia. It's an administration that's trying to do a lot very, very quickly and in rushing policy potentially at times in order just to say you've achieved something. The devil in the detail perhaps raises some questions.
Yeah, you don't know where it ends up, Ross. Thank you so much, as always. Rosalind Matheson there, Bloomberg's EMEA News Director. Now, continuing support for Ukraine will be high on the agenda at the European Bank for Reconstruction and Development's annual meeting in London this week. Now, the EBRD has already deployed 7 billion euros in Ukraine since the start of Russia's invasion 3 years ago. The bank is also extending operations into sub-Saharan Africa for the first time. Well, I'm delighted to be joined by Odile Renaud-Basso, the president of the EBRD. Thank you so much for joining us, as always.
Thank you, Francine.
Congratulations also on expanding some of your operations in sub-Saharan Africa. I mean, this is a region with substantial infrastructure gaps, pressing need for expanding access to clean energy. So what sectors will you focus on at the start?
Exactly what you mentioned. I think that investing in clean energy, investing in key infrastructure, focusing on what is needed to develop the private sector, which is at the core of the mandate of the bank. So we will probably start working with financial institutions on trade finance to facilitate trade, export, import, but also finance small and medium-sized businesses, green energy, renewable. There is a lot of potential, so we will start with projects like that. But in all these areas, trying really to develop the private sector, also to create jobs, because Africa is our countries with very high demographic growth, and they need a job to be created also to grow and to be sustainable.
Because, of course, your choices will then translate into some opportunities for international investors. So
yes.
Have you received positive feedback from them?
Yes, exactly. There is a lot of interest also from business, from countries in which we work. For example, we have a big partner in renewable in Egypt, which is willing to invest with us in sub-Saharan Africa. Or banks from Morocco, they are very active in a number of sub-Saharan African countries. They are going to be our first partner in expanding in these new countries. And a lot of, European business, international business willing also to invest in the region.
How much capital are you expecting to unlock? I think, there's you've been clear to invest in 6 countries and up to 6 countries through 2030.
Yes, exactly. So we will start by a few hundred million, and we expect to go to billion of investment. Nigeria is likely to be, it's the biggest countries in which, we will start to invest, and I think that there will be a lot of opportunities. So it will be above 1 billion in the course of the years to come.
Odile, one of the things that we've been also trying to figure out, of course, this is a continent that has huge opportunities. That's also really courted by China's Belt and Road initiatives. We know that also Gulf state investments want to go into Africa. So do you feel like you need to, is it a tougher crowd because you have so many people in, or is it good, is competition good for investments?
Competition is always good for investment, and the needs are very, very important. And I think the focus on the private sector rather than only public sector, big infrastructure, is where we will make a difference. And we will also bring together with our financing the capacity to advise government on reforms, what is needed to unlock private investors.
But will you compete with some of these projects, or can you also align with some
I
of the
think we
strategy
work.
of
I mean,
others?
we work with other MDBs. We work with African Development Bank, for example. We also work with AIB, which is investing a bit in sub-Saharan Africa, and we will work with IFC. So a lot of partnership also with our other MDBs.
Odile, I mean, leaving the politics to one side, trade and tariffs make it more difficult if you're in the middle of a war, like trade war, to understand exactly the cost of capital, where to deploy capital, and all of the like. Does it mean that some of you finding the projects will be delayed because of U.S. China and U.S. Europe?
It may happen. I mean, the level of uncertainty is extremely high, I think, at the historical level, and that's not good for investment because, as you were saying, investors wait to see where to deploy their capital and so forth. It could also, all this reorganization of supply chain and so forth could create some opportunities for countries in which we invest because, they could benefit from proximity with Europe and so forth. So that's also an area for opportunities. And what I believe is that with such high level of uncertainty, the role of multilateral development bank is even more important. We play a counter-cyclical role, and I think the likelihood that we will be even more needed is quite high.
Talk to me a little bit about Ukraine. I know the EBRD has been heavily invested in the country. What needs still? There's a lot because we don't know whether there's a ceasefire. So this week will be crucial. The next couple of months will be crucial. But what have you seen in terms of project, in terms of infrastructure, in terms of how much money is needed in Ukraine?
So we see a huge need for continued support. We are continuing to focus on the real economy. We have already invested more than 840 million euros this year, 20 projects with the private sector, a lot of financing, more than 260 million for Naftogaz, so to create some storage capacity in terms of gas and be ready for what comes next. So still a lot of need for support, but we see the resilience is still there. The capacity of private sector to continue to invest and to develop their activities in Ukraine is still there, and that's why they need support.
Is energy, without a doubt, the most, the biggest opportunity in Ukraine?
So out of the more than 7 billion we invested in the last 3 years, 2.4 billion in energy. And in energy storage, to build storage, as I was saying, build storage capacity by gas, but also development of renewable. And it's interesting to see investors from Germany, from outside Ukraine, starting to invest in renewable in Ukraine. So it's a very positive signal of trust also.
If you have a ceasefire, but it's a ceasefire that could be short-lived, does that make a difference in terms of investment in the country, or do you just have to...
It could facilitate, but to have real appetite from foreign investors to invest substantial amount in Ukraine, a full-fledged peace and sustainable, credible peace would be, would be better. But a ceasefire would already be a positive development. I think that helping, giving some sign of confidence that things will improve over time.
Odile, thank you so much, as always, for joining us. Odile Renaud-Basso, the president of the EBRD. Now, let's also look at markets, because there's quite a lot going on in the markets. We saw that U.S.-China trade deal, or trade agreement to lower tariffs in the 90-day cool-off period, and that's really sent a lot of the markets up. S&P futures gaining some 2.4%, NASDAQ futures gaining also 3%. Now, again, a tariff reduction is really a move to cool trade tensions and give the two countries 3 more months to resolve their differences, with talks potentially leading to purchasing agreements by China. Coming up, pharma stocks tumble after President Trump announces plans to cut the cost of prescription drugs in the U.S. We'll have the details next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Now, global stocks surge as the U.S. and China announce a cooling of the trade war following a weekend of talks in Switzerland. Chinese tariffs on U.S. goods are cut to 10%, while U.S. levies on China will be 30%, but only for 90 days.
We both have an interest in balanced trade. The U.S. will continue moving towards that.
Plus, pharma stocks tumble after President Trump announces plans to dramatically cut the cost of prescription drugs in the U.S. Now to the Middle East, where President Trump is spending the week touring the region. ABC News reports that he could receive a luxury jet from Qatar to replace the aging Air Force One during the visit. Now let's bring in Jumana Bersace, a Bloomberg Horizons Middle East and Africa anchor in Riyadh. Jumana, thank you for joining us. Tell us a little bit more about the gift. It's a very lavish gift. It's an expensive gift.
Yeah, most definitely. But also beyond that, Francine, it raises a lot of legal and ethical questions. Just to remind viewers that the U.S. president is not technically allowed to accept a gift from a foreign government without congressional approval. So when this news story broke yesterday by ABC, it certainly raised a lot of eyebrows and lots of questions about conflict of interest. Now, President Trump did indeed confirm that those discussions are taking place vis-a-vis the transfer of ownership of that Boeing jet. But then a Qatar media attaché to the U.S. did confirm also that the discussions are taking place, but that no decision has been made yet. So still something that is in discussion mode. But again, raises a lot of questions ethically, legally, and then also around conflict of interest, because even though President Trump has stepped away from the day-to-day running of the Trump organization that is being run by his sons, Donald Trump Jr. and Eric Trump, a lot of deals have been signed in the run-up to his trip to the GCC. You had Eric Trump in Dubai a few weeks ago announcing the inauguration of a new Trump Tower. You have his son-in-law, Jared Kushner, who has opened up a fund that has received funding from the Saudi Sovereign Wealth Fund. You have live golf tournaments being played at multiple Trump resorts. So definitely there is this backdrop of a conflict of interest question, even though the White House say that President Trump is no longer involved in the running of the business of the Trump organization. But that is the setup going into this week, and I think tells you a lot about perhaps what President Trump is looking to achieve. This is less about peacemaking this time around, but more about deal making and what potential investments the U.S. can get from some of these GCC nations and what deals can be signed. And some of the sectors that they've been talking about is in the defense space. There's been reports of a $100 billion defense deal to be signed between U.S. and Saudi Arabia, critical minerals, AI, with UAE and Saudi Arabia pushing for a watering down of some of those rules, the diffusion rules that the Biden administration took into effect. And of note is that tomorrow, which is the day that President Trump actually lands in Riyadh, there is going to be a U.S. business investment forum with some of the biggest CEOs from around the world flying in, including the likes of Larry Fink from BlackRock and the CEO of Citi, Jane Fraser.
Yeah, a lot to unpack there from the plane to everything else that Donald Trump is doing this week. Now, we also, as we expected, given the oil price drops, Saudi Aramco reported decline in Q1. What can you tell us?
Yeah, and that's a really important data point, Francine, because it also just sheds light on the economic backdrop of Saudi Arabia this time around. It was obviously the place where he visited first in his first term in 2017. This is 8 years later, and Saudi Arabia's finances have actually evolved. You look at the numbers that came through from Aramco yesterday showing a decline in net profits and net income around 5%, still better than some of the other energy majors out there, but also they've cut down the dividend. And why is that relevant? Because it is actually still an important source of revenue for the Saudi government. The Saudi government and PIF still own 97% of Aramco. And so the fact that this dividend has been trimmed suggests that they will have to find other sources of revenue to fund some of those mega spending plans. Already, the IMF forecast that Saudi Arabia are going to enter into a current account deficit. They have a budget deficit, which means that the scope for them to come out with these lavish spending plans abroad or quote unquote to live up to their image of being big spenders is becoming smaller. There's going to be more focus on Saudi Arabia to channel investments internally. And this is why those numbers, the Aramco numbers, the oil backdrop all plays into some of the discussions that are going to be taking place this week, because it's not only going to be about GCC and Saudi Arabia investing abroad, but also them trying to get U.S. money invested into Saudi Arabia as well.
Jumana, thank you so much. Jumana Bersace there in Riyadh. Now let's continue with a lot of earnings here in Europe as well. UniCredit earnings beat estimates, setting the tone for a busy week of corporate earnings as Donald Trump's promise of an executive order on drug prices is roiling the pharmaceutical sector today. Well, Charlie Wells is here with an update. So, Charlie, how do UniCredit's earnings help or hurt the bank's M&A ambitions?
Yeah, Francine, so these earnings are the best quarterly earnings that UniCredit has ever posted in history. And this is certainly a boost to Andrea Orcel as he pursues M&A not just in Italy, but also in Germany. You can see the CEO putting out this statement this morning, talking about searching for growth opportunities from a position of strength. He also told Bloomberg that the company will be in discussions with Rome about BPM and some of the limits that the government had put on a potential deal there. But as these deals take longer and longer, you can see some of the share price moves of some of these targets making that more difficult. You can see the likes of BPM heading upwards. You can see Commerce Bank as well. Now, this will undoubtedly, and we're seeing this morning, provide a boost for UniCredit, but we can see that the length of this negotiation process has been difficult for the bank. So this provides an important boost at a crucial time.
Charlie, what other earnings are we expecting this week?
Francine, so it is a busy week across insurance, across luxury. We've got some of the biggest names in those sectors reporting. We've got Munich Re tomorrow. We've got Burberry the day after, Allianz on Thursday, and then Richemont rounding out the week. Now, it's interesting, some of the big themes here in insurance, how these firms have been navigating market turbulence. On the luxury front, we'll get a really interesting kind of side-by-side from a kind of soft luxury on the Burberry front, and then Richemont, more of the hard luxury. When consumer sentiment goes down, we tend to see a hit on more of the soft luxury companies. And zooming way out, looking at how these European firms have been reporting, about 80% have reported so far. A majority have been beats, but the focus really has been on that forward guidance. That's been much more of a mixed picture.
Charlie, pharma definitely in focus. In fact, getting slammed today. Tell us more.
That's exactly right, Francine. So this is one of those mornings where a Trump social media post really upends a global industry. We're seeing this Truth Social post where Trump is talking about how he wants to lower the price of prescription drugs for Americans. We know that Americans pay the most for prescription drugs of anyone in the world, but there's not a lot of clarity on how the president would enact this policy. Nonetheless, we are seeing these firms across the globe get slammed. Here in Europe, we're seeing a lot of red. We're seeing a lot of negativity around this sector. You can take a look at some of these European pharmaceuticals taking a hit this morning. And then if we flip the board and take a look pre-market at the United States, you can also see negativity there in this space.
Charlie, thank you so much. Charlie Wells there with the very latest, of course, on earnings that have been and the ones that will come, with a nice focus on pharma. So let's get more on President Trump's drug price plans and bring in Sonia Wind, Bloomberg healthcare and consumer reporter in Frankfurt. So, Sonia, what exactly do we know about what will be announced and whether there are winners and losers?
Hello, good morning. Well, the details are very scarce. What we do know is, as you mentioned, Trump will sign an executive order today mandating that Americans do not pay any more than other people in countries around the world where drug prices are lower. He said that could lower drug prices by 30 to 80%. However, how he wants to do that is not clear. It's important to note he already tried something similar during his first term. Back then, this idea was struck down in court. So the details are still yet to be announced. Maybe we'll get some later today. As of now, it's more of a headline than really a defined policy.
And how would an order like this actually work?
So the idea is that the US would benchmark its drug prices, which are the highest in the world, to the drug prices in other countries where prices are lower. Trump also mentioned that drug prices would rise around the world as a result of this. So that's the idea, that drug prices would then push up prices so that the benchmark in the US wouldn't be forced lower. However, how realistic is that? It's not very realistic. Here in Germany, drug prices are very tightly regulated, and it's not possible for companies to simply push up drug prices. And then, of course, the question is, where would it apply? Would it cover all drugs? That, of course, would be the worst case scenario. Will it affect Medicare, Part B, Part D? Would it affect Medicaid? That would be less of a negative outcome because there are already some discounts there. So the details here really matter, and of that we don't really have enough yet. So let's see what we will see later today.
Sonia, thank you so much. Sonia Wind there, of course, on the latest with these pharmaceutical stocks. Now, the Kurdish separatist group, the PKK, has agreed to disband after ending its 40-year war for autonomy against Turkey. Now, the group declared a ceasefire on March the 1st, and the decision to disarm was made at a Congress last week. It's unclear whether Turkey will offer amnesty for the group's leadership and exiled militants, and how it will address demands for improved rights for Kurds. Hamas says it will release Eden Alexander, the last living American hostage still being held in Gaza. Now, the news follows renewed talks with the U.S. in recent days over a ceasefire with Israel. Hamas did not say when Alexander would be released. Well, meanwhile, Israel has endorsed President Trump's plan for a phased resumption of food distribution to Gaza civilians. The United Nations had warned of a growing humanitarian catastrophe in Gaza due to the Israeli blockade. The UK is tightening citizenship rights and raising English-speaking requirements for migrants in an overhaul to cut immigration. Now, the Prime Minister, Keir Starmer, is introducing a bill to end automatic settlement after 5 years and limit low-skilled work visas. Now, migrants will need to spend a decade in Britain before applying to settle.
Today, this Labour government is shutting down the lab. The experiment is over. We will deliver what you've asked for time and again, and we will take back control of our borders.
Coming up, EU finance ministers meet in Brussels. We'll head there next for an exclusive conversation with the new Greek finance minister. That's next, and this is Bloomberg.
Well, right now, there's a lot of uncertainty about what's happening with trade policy. Right now, the economy's in a really good place in the U.S. Unemployment's in 4.2%, inflation's 2.3%. The other indicators show we're still a pretty solid economy. So right now, we have time.
Overall, we see health still in the real economy. So that gives us time to make sure that we continue to make progress on inflation and we keep our inflation expectations very well anchored.
Well, that was, of course, the Fed's Adriana Kugler and New York Fed President John Williams speaking to me at the Reykjavik Economic Conference last Friday. Now, Eurogroup finance ministers are meeting in Brussels today as the EU seeks to strike a trade deal with the U.S. Well, Trump has targeted the bloc as part of his broader effort to reshape global trade. Officials will also discuss funding for Europe's defense push. Well, Bloomberg's Oliver Crook is in Brussels with the Greek finance minister. Ollie, over to you.
Yeah, that's right, Francine. I mean, listen, it's a very filled docket here in Europe dealing with a number of different issues. And of course, I think front and center probably where you're going to get is this question of trade, though this is technically at the EU level sort of competence. This is the inevitable conversation really around the world. So we're very pleased to be now joined by the Greek finance minister, Kyriakos Pierrakakis. Thank you so much for joining us today here in Brussels. So listen, we just had the press conference from Geneva, from the Swiss. We have this sort of a reprieve on the trade deal with the United States and China. Sitting here in Brussels, sitting in Athens, what does that tell you about what the United States is trying to achieve? And do you think that puts us closer towards some kind of resolution with the United States?
First of all, it's great to be with you. I think that the news are positive. It's a positive development, the one that we're seeing. Obviously, we will have to study the details of any agreement, as we plan to do in the Eurogroup and the ECOFIN meetings with my colleagues at the EU Council. But overall, our position as Greece, we're a member state of the European Union that believes in free trade, in a union that believes in free trade. We hope to lower the temperature in the room. And any such deal, any such development, it's already reflected in the markets, is quite positive.
And in terms of kind of what, because we also heard from Scott Bessent saying that the EU has fallen further back in the line in that press conference. He says that the UK jumped to the front, the Swiss are doing well. What is your sense of how close the Europeans are to actually reaching a deal with the United States? Their task is made more difficult, obviously, by the fact that there are 27 member states. Do you think that that puts us at a disadvantage here in Europe in terms of negotiating an actual outcome?
I had the chance to meet with Scott Bessent in Washington in the context of the IMF spring meetings, and my message to my American colleague was the fact that we hope to move quite fast, quite swiftly vis-a-vis achieving a very positive trade deal. The position of my Prime Minister, of Kyriakos Mitsotakis, was ideally we should have a 0-to-0 tariff relationship with the United States. As I said, we hope to lower the temperature in the room. Yeah. I think it's feasible. We are a 27-member state union, as you suggested, but I think that we can move quite fast.
And given what we saw from the UK, you still have those 10% tariff barriers there. Does that give you an idea of kind of what you can hope for from a deal with the United States? Because 0-to-0 seems fairly unlikely at this stage?
Well, look, we're going to shoot for the best. We're hoping to achieve the best. Generally speaking, we should try to remove trade barriers. But if you look at the EU budget, by the way, at the structure of the EU budget, I think around 13.7% of the EU budget already comes from tariffs as we speak. It's part of the overall EU trade architecture. But hopefully, ideologically, what we believe as Europeans should be to eliminate those trade barriers. Plus, we should be trying to remove the internal barriers that we already have within the European Union, the Draghi report, the Leto report. And this is part of an overall discussion of an overall new architecture that we should aim to strive for.
And one of the features of the trade war has also been extremely heightened market volatility that we've seen throughout the world. I remember a time that when you had that market volatility, you had German and Greek yields moving in the opposite directions. They have been moving in lockstep. We've seen basically, that story be a sort of haven assets within Europe. What do you think the opportunity is from the sort of U.S. policy in terms of attracting capital here into Europe, attracting talent? How does Europe capitalize on kind of some of the uncertainty we've seen out of the United States?
It's funny that you mentioned that volatility, because in the past my country used to play a role in this discussion. We created that volatility, and now we're a stability story 15 years later after a lost decade. Plus, to add to your point, we discussed tariffs. Uncertainty is a much bigger problem. So the positive premium of those discussions, of those trade deals that we're seeing on the ground right now on behalf of the United States, with China, with the United Kingdom, with us as a next step, is to remove that uncertainty from the table in order to have a positive growth dividend in this debate. Is it an opportunity for Europe? Yes, we should always view crises as opportunities. If you look at European history, by the way, in every move of European integration, you had the crisis that catalyzed that integration, which we then metabolized as a positive institutional reform move. We should be able to do the same. The banking union, the savings and investment union, the capital markets union, all of those things that we have been discussing, as you very well know, for quite some time. It's a topic, again, of discussion at the Eurogroup meetings, at the ECOFIN meetings. It's an opportunity, and we should grasp it.
And when you think about that integration, kind of concretely, because again, as you know, we've been talking about the capital markets union for a decade at least, and now we have some renewed urgency. But I'd like to get a sort of an idea from you. When do you think we can make meaningful progress on this? And where do you sort of stand? And where do you think the sort of hurdles are?
The hurdles used to be that we had to negotiate a full spectrum of things, of details, of member state sensitivities in all of those discussions. But again, a crisis can help as a catalyst vis-a-vis removing those sensitivities, vis-a-vis removing those hurdles. I think that there's a real opportunity on the table, and we plan to be very constructive with regards to achieving a very positive result.
And I also want to get your take on some of the domestic issues going on within Greece. You are now you're paying ahead of schedule a lot of your first bailout debt. Is that something that we can expect more of? When do you think the first bailout can be completely behind you? Are we expecting that to come ahead of time?
It should be completely behind us by 2031. This is 10 years ahead of schedule, as we have been discussing both domestically and internationally for us. For my generation, for my government, fiscal prudence is not a policy choice. Fiscal prudence is a regime. After having a very difficult decade, a lost decade, we lost 24 points of GDP. Right now we're growing ahead, much higher than the EU average, 2.3% growth. We had a headline surplus. 6 countries in the EU had a headline surplus. We were one of the 6. And we plan to continue de-escalating our debt. We don't plan to pass the bill to the next generation as all the previous generations in Greece did. And in this context, we hope to create positive tailwinds, even if we see negative headwinds in the international economy.
And part of the contributor to that surplus that you had, that surprise surplus that you had last year, that was quite ahead of what anybody had anticipated, was a drive to basically deal with tax evasion, to collect taxes. Again, is this something that we can expect more of going forward? And what is it going to mean budgetarily? Do you expect more surpluses in the future? And how big, do you have an idea of how big that shadow economy is and how much revenue could be there for you?
The first point would be that the expectation for the next primary budget surplus for next year, for this year, is 3.2%. So overall, we hope to achieve primary budget surpluses in all future scenarios. Second, if you look at studies that were conducted on behalf of the IMF in the previous years, the shadow economy was calculated to be in the ballpark figure of 30%. In the past, it was even 40%. In the last IMF study that calculated the shadow economy in Greece, the number was 15%. And right now, it's even lower. We plan to lower it further using digital technologies to capture tax evasion. We managed to do that and achieve the budget surplus that you mentioned before. We had a VAT gap. We have a value-added tax in Greece. Half of that VAT gap is already captured by our smartly shaped policies. We hope to do more. Overall, I would say digitization is a success story for Greece. If you look at our government platform, gov.gr, it has more than 2,000 services offered digitally.
And I've talked to a lot of finance ministers over the last couple of months, and as you can imagine, the focus has been on trade. And I just want to return to that just for a moment. Do you have an idea, do you have your arms around how damaging this could be to the trade war is to the Greek economy, or is it still too early to say? Because every finance minister I've spoken to the last few months say that basically it's incalculable. Now, do you have an idea of what the damage to the Greek economy could be?
I adhere to the position that it's extremely difficult to calculate the effects. The primary level effects in Greece, if you look at them, they are limited. We have less than 5% of our exports. 4.8% of our exports go to the United States. It's less than 1% of our GDP.
But it's a huge flow for trade.
But it's a huge flow for, we're a maritime nation. It's a huge flow for trade. We're primarily worried about the second order effects. What would happen, for instance, if the American economy moves into a recessionary or even to a stagflationary environment? What happens if you have a recession in certain European markets which directly interact with the Greek economy? All of those things worry us. This is why we believe that we should remove as much as we can the heat from the room.
And one of the topics that you'll be discussing today will be, no doubt, the defense plans within Europe in terms of dealing. And Greece is one of the sort of highest spending nations in terms of GDP, and the NATO commitment above 3%. The Trump administration would like to see 5%. Do you think that we need to get to a world where we're closer to 5% rather than 2%? And is there an avenue to get there without European joint debt? And where do you sort of appraise the debate on the question of joint debt for defense in Europe?
Well, I would say, first of all, that for us, defense spending was not a policy choice per se. For us, it was geographic destiny. It was one of the things that we had to focus on and invest on many generations before. And we're hoping to do it better in the future with more spillover effects in the economy. There were certain Bloomberg reports in the past which underlined that Greece was not spending the defense amounts in the maximum spillover effects capability that it could. We hope to do more of this. For us, that would be a growth dividend. But overall, the treatment of defense spending as it currently takes place in the context of the EU Council, I think, is positive. We should have some exemptions vis-a-vis the new fiscal rules of the European Union, and the current geopolitical environment mandates those exemptions. And we paid our fair share even before. More EU member states should be able to do that. Germany is now doing that. I think that we should have those degrees of flexibility with regards to achieving this.
And just a sort of final question on trade, because this is another question that I think is a very big one, a difficult one to answer. When we look at the trade barriers that were erected between China and the United States, the big concern is that all of that overcapacity flows to rich markets. There really is only one that rivals the United States, that is the European Union. How do you treat some of that oversupply coming from China, potentially coming into the European market? And what we're seeing from the United States rewriting this trade order, what have we learned about how trade deals should be structured and potentially differently in the future to protect, sovereign industry?
We don't yet know. There is lots of uncertainty. There is lots of uncertainty on the table right now in all of those discussions. We don't yet know if we're going to be in a zero, in a limited, or in a high tariff environment. The world that we're going to be at in 90 days, 100 days from now will directly affect the answer to your question. But what we do know is that tariffs are going to directly affect supply chains. If we look at what happened in the past, take the 1930s, the Smoot-Hawley Tariff Act of the United States. This had a very adverse effect for the global economy. We should do our best with regards to trying to avoid that at all costs, and this is what we plan to do at the Eurogroup and at the ECOFIN meetings.
Well, Kyriakos, Pierrakakis, I look forward to speaking to you in 90 days when we have certainty on the world that we're living in, and until then, I'll land it back to you in London, Francine.
Yeah, the world stops for 90 days, and then we see what happens at the end of that. Ollie, great interview, Oliver Crook there in Brussels. Now, very quick day book, because there's a lot going on this week. First of all, Donald Trump is in Saudi Arabia. Today, tomorrow, we have a bit of data out of the U.S., CPI. Thursday, we continue with earnings from Walmart, but also we have U.S. retail sales. Again, that will give us a bit of an indication going forward of what the U.S. economy will do. Jay Powell's also speaking. And then on Friday, University of Michigan Consumer Sentiment. This is the picture overall. In Europe, some stocks are up, some stocks are down. Defense actually down by quite a lot. Pharmaceuticals also down. And then if you look at some of the things that are doing better than others, probably the ones that are more exposed to China because of this agreement between the U.S. and China. Up next, Bloomberg Brief, and this is Bloomberg.